We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelming on gold's side. That is the best environment to see gold increase its value.
Hey, this is Tom. If you've found value in these interviews over the years, please don't forget to like and subscribe to the channel, especially on YouTube. I don't like to interrupt the show to do this, but it helps our channel to be seen, which has proven to be more and more difficult on certain platforms. Thanks. Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Josh Phair, CEO of Scottsdale Mint and the Wyoming Reserve. Josh, thanks for joining me today. Good to have you back.
Yeah, thanks for having me, Tom.
So I recently came across one of your tweets, and I think this kind of sums up a good way of looking at the world of where we are right now. And you said that central banks are voting with their balance sheets. Treasury holdings are at 22-year lows and gold reserves are at 26-year highs. So does this mean that gold is basically replacing treasuries as a primary neutral reserve asset on banks' balance sheets?
Yeah, I think it's pretty clear. They're not really announcing it to the world, but they're de-leveraging. They're de-risking their own balance sheets. They've obviously printed so much fiat, and if you watch what they're doing, they're printing more fiat, right? But they're just taking some of it and they're buying gold with it. So I would say if you're not following the footsteps of giants, you're falling behind. And so there is absolutely a race between, I'd say, the bigs. It's pretty much, China really started this a few years ago. Trump a number of times has warned on X the BRICS countries to not create a competing currency with the US dollar and then don't back it. He doesn't say back it with what, but I think for those watching, you probably are well aware he's talking about gold. And then all the gold starts being imported into the United States, quite heavily into, started kind of late last year. Clearly, there's a metal race, for resources, whether it's in ground or above ground, for anything from critical minerals that you need for technology, military, and then obviously for monetary reasons. So yeah, I would say it's clear that you look at that historical those historical rates, they're raising the amount of gold that they're bringing on. And with Basel III about to start this summer, physical gold ownership becomes critical for the banks. So that is 100% risk-free asset on their balance sheet. Whereas if you own an ETF, it is not 100%. So I think you're seeing exactly that, and I think it's reflected in the price to some degree. But I think where people don't realize is it's not going to stop. So there's a lot of distrust of politicians all throughout the world, institutions. I just don't see that changing anytime soon.
Mm-hmm. So you mentioned this situation with metal being taken out of and being asked for delivery from the LBMA, whether that was gold and or silver. They were both kind of had different peaks, it seemed like time-wise. But you also mentioned Basel III kind of coming into effect this summer. So do you think that this was kind of the perfect storm of the threats of tariffs, nobody knowing whether they were going to have to pay tariffs on gold and silver metals, along with maybe banks trying to front run and or get ready for these new regulations via Basel III?
Yeah, I think it was probably a little bit of all of that. You've got, at a minimum, it's a really good cover as well. So, in terms of why is all the metal going? So everyone just assumes it's only tariffs, right? Maybe. But I think at this level of the amount of gold that was coming in, it didn't make sense that was the only reason. Because while I would say there's been a lot of front running of commodities and products, and I think we're going to see that in our GDP report, right? Q1 kind of pre-tariffs, a lot of businesses stockpiled stuff, whether you're a mattress company, furniture company, to electronics, phones, you're get it in. But obviously we're going to have the after effect, right? Coming soon. So did that happen with gold? The problem with gold is it's very expensive. So why? And And I don't know how strong the risk of actual gold being tariffed really is, because it's clear Trump likes gold. He wants gold here. He's very mimetic. Just look at his offices. The Oval Office is all gold gilding everywhere. It's just, so to think that you're going to tariff it, say don't bring it here, to me just doesn't seem likely. It's a monetary instrument. Mm-hmm. And it's not steel, right? It's not being used. It's not being dumped in certain markets to destroy other people's economies. And if anything, there's a chance that a deal was struck, in the Middle East, where that was, hey, I need oil down. Trump's got a big need. He needs oil down to reduce inflationary pressures. Was there a deal done that it was oil down, gold up? So possibly, yeah. So I'd say there's a lot of things all happening all at the same time. It's amazing cover, and now we're facing, the last couple of weeks, we've got a lot of stock market jitters. We've kind of bounced back, which is again normal since the beginning of this quarter, but you got capital rotation, and it's capital rotation in and out of treasuries, continents. How many other foreign central banks, including China, owned companies in the U.S.? And I think, Trump is basically saying, get out of the NASDAQ. So we've had a lot of ownership by foreign entities that maybe are not super friendly with us. So it has felt like, is Trump preparing us for the inevitable? Is he just making us go through a tough time now for whatever might be coming?
Mm-hmm. Well, Josh, with this, let's say this LBMA delivery issue, those delivery times got pushed out, 3, 4, 5, 8+ weeks at some points I was reading. So do you think that it has actually delivered everything that was demanded from it at the time?
I've not heard of any defaults on anything. So, I'm in the physical metal movement and have done it. I'd say the hardest time that I've been through in the last 16, 17 years of being in the physical metal space was COVID, right? You could get access to silver or gold, but was it in the right form, in the right location at the right time? And so whether you're trying to get it on a boat and it's leaving Poland and it's got to come to the US, or it's coming out of Korea, and it might be, is it in bar form? Is it in grain form? What's the spec on it? So I think, a lot of people said that the LBMA defaulted. Well, I don't think they defaulted by, I think there were a lot of people that wanted that to happen. And I'm not here to say whether they've got it all or not. And obviously there's a lot of concerns about leasing gold. Has it been rehypothecated? And I think a lot of people are saying, you know what? I'll take possession of mine now, early. Let's move it here. Let's move it into my jurisdiction. So I think the theme is that jurisdiction matters, whatever location you're at. And so the Chinese are saying, we want it on our land. The Germans are saying they want it in Germany, right? Venezuela asked for their gold from the Bank of England, and they were told no. So I think, what we saw, really after the Ukraine war, is that those reserve assets that Russia had were seized all over the world, and in particular in Europe. Mm-hmm. And I don't think Putin expected his European neighbors to seize his assets. So you're basically forcing people to go to more of a commodity-backed world where, physical gold on your land is a lot harder to block out of the system. So, I think from what I know, all the gold was delivered and it is flowing. It might not be at the speed or the pace anyone wants. And I also think, too, it was probably underestimated that you can't have Chinese origin gold. So I realize a lot of people say there's Chinese don't send metal there, but we're talking the Bank of England. This stuff has been around who knows how long, right? Mm-hmm. So some of these bars could be from eons ago. So, and you can't bring in Russian bars that could have sanctions. So, as they're pulling metal out, they're having to figure out what labels and bars, and then, what purity spec is it? Everyone's got a different weight need, purity spec need. So I truly believe it's not an easy thing to do, all at the same time. And now we're seeing a little bit of competition from other countries. They're wanting gold. So the Swiss, there's actually been gold leaving the United States now. So we're just seeing metal rotating. So everyone's competing, and then they're offering extra premiums. So I know, China's hungry for gold right now. And I know the Swiss have been bringing in a lot of gold as well, even though they're a huge refinery nation. So yeah, I think it's been an interesting twist to kind of watch this happen. And I don't think the movement has stopped. There's just metal's going to be continuously flowing around.
Mm-hmm. I was going to ask Josh, does the LBMA not have a similar spec to the New York market where, it has to be a specific bar of a specific purity, and that is kind of how, or that is the level at which bars have to come in and therefore are easily, let's say, tradable?
Yeah, I think all the exchanges have had their own specs and requirements throughout the years. You saw during COVID, the COMEX kind of amended a few things to allow, other products to come in. And so they're trying to streamline this, all throughout the world. And now you're going to see competition to the LBMA, right? So you're seeing, the BRICS nations are trying to create their own, pricing and price discovery mechanisms. At the end of the day, people want pure gold, and they want to know that it's coming from the right place. And so, all these institutions also have to, we trust, but we verify. Mm-hmm. So like as my company, as Scottsdale Mint brings in material, we always get an assay certificate of what is in there. But we're sending it off to third parties as well. We're getting it verified. And then as we're managing it in-house in our lab and every day, we're monitoring those things. So, for the most part, the industry, we know the brands, we know the material, and we feel really good. Well, guys in vaults don't have access to all this same amount of material to quickly verify it, whether it's fire assay or whatever. So this is what kind of requires a little bit more in depth, which also makes people say, hey, have we truly done an audit of Fort Knox even? Did they look at bars? Are they real gold? Are they there? These are all grand questions that I think are left unanswered still to this day.
Mm-hmm. Well, before we get to that piece, I wanted, and basically as a segue to that question, I wanted to know, if we take a step back and try to analyze this situation, obviously a lot of it is going to be speculation, but is there any way to understand if the US was buying some of this gold to, I don't want to say necessarily to refill Fort Knox, or, because there's always that speculation part of it, but, is it possible that I guess it would be the Treasury and or Fed is buying more gold?
Well, and there's more than, they created a sovereign wealth fund that mm-hmm. we don't know a lot about, right? So, I mean, in theory, the government can do just about anything it wants to do, right? It can create new buckets and new things. Do they report it? Is it delayed reporting? Look, are there things that you could do under military? I mean, there used to be a strategic military stockpile of silver. Mm-hmm. So, could they could go out and really do anything they want. My personal take is the sheer the amount of gold that came here had to have, and it was disrupting the markets. And so if you're a private enterprise or a private enterprise or an individual, you're going to get a knock on the door. You're going to say, hey, you're disrupting trade. You're possibly cornering the market. We need to know a lot more. No, I don't believe there's any knocks on the door. So we've also seen court cases in the mining industry. I think it was 20 something years ago. I think it was Sons of War out of South Africa. And there was a lawsuit about a bank manipulating the price of gold. And it was thrown out in the courts. They said you can't sue the bank because they're acting on behalf of a sovereign nation. So the question is were they manipulating the gold to suppress an asset in Africa so that they could then take acquisition of that gold mine? And this is probably that's what it was. So, you know, are they buying? Is it the material above ground? Is it underground? I think you're seeing China. You know, a lot of the Middle Eastern countries are racing to buy gold all throughout Africa, for example, in the ground. Mm-hmm. Deals are being cut, and now, you know, Trump's trying to push for Greenland and Canada. Let's make them states. So there's no doubt that things are done that you can see, and then sometimes they say, "Hey, look over here," but they're really pulling other cords over here. And this is just historical. Historical things. You know, people fight over, you know, money, the assets. And gold has always historically been part and parcel of settling war debts, or financing of war beforehand. You're seeing Poland buy more and more gold. I think they were the number one buyer in 24. They're not the biggest country. I know they're going to become and are becoming a rival even to Germany's economy. But a lot of it's being stored at the New York Fed. They're on the border of Belarus. So I think, you know, historians can kind of look at this and say, you know what, they've got some assets with someone that could do financing for them down the road. So yeah, I'd say there's an awful lot of things going on. And as I just kind of watch the chips being moved, and you would have to think Bessent, you know, is a huge fan of gold. He tells you in a recent sit-down interview, he talked about how it's a risk on and a risk off asset. Gold is. And so what does that tell you? It says that he wants to buy and own it all the time. That's kind of what I read out to it. Whereas he mentioned Bitcoin is only, I think he said, are only a risk on. So these types of things are kind of interesting to watch. And then just kind of, you know, I don't have any super insider baseball. It's just what I watch and keep an eye on.
Mm-hmm. Well, you know, when we think about what Bessent has said about gold, you know, there was the speculation that or not the speculation, but his admission that he liked gold and it was his biggest holding. And then it came out that he basically didn't own that anymore once his kind of records were brought public. But specifically when we think about his comments around monetizing the asset side of the balance sheet and said it wasn't specifically about gold, what do you think, what else can it be about?
Well, can he be fully transparent if he hasn't done it yet?
True.
That's my take. So, no, I mean, if you're starting a company or launching a new fund or something, and you haven't placed your own bets, you don't talk your book. You talk your book afterwards. It's kind of like Jamie Dimon talking about Bitcoin, or these guys that talk about gold, or a lot of them don't talk about gold. So you're now seeing Fink at BlackRock. He talks all about how if you've got, you know, we can't trust the politicians, you need to buy Bitcoin. Well, his firm has a big interest, but he also represents central banks. He doesn't talk about gold because the central bank clients are buying it. So that's just how I look at it. So I'm not completely sure how transparent he can or can't be in interviews like that. And perhaps, you know, a lot of times politicians, you know, they'll take something and says, I'm not doing it. And then they'll go back and says, well, I wasn't doing it at the time. Right. So good, very, very good question. And we don't know, we could all guess as to what's going on. But I just look at it during the turbulence of the last number of weeks in the financial markets. What's been the number one asset performance-wise? It's gold. Mm-hmm. It's gold. So who's buying it? Somebody is. It's huge players. So is it Japan, China, the United States? You know, who, what, when, where? But it's clearly, and gold's going to be volatile. There's no doubt. But it's been an interesting April so far.
Mm-hmm. Well, Josh, I've read that you don't believe that most people own enough gold and silver for what's coming. So, do you see what's coming? And talking specifically about what that looks like, is it a possible voluntary reset by the US of the price of gold? Is it maybe one that's more imposed on the Treasury and the Fed by a market meltdown? Like, what do you think that looks like?
Yeah, man, there's a lot of different scenarios that are probably very, very valid as to, the way it could go. It would feel like to me, if I had to put a date on it, it's not overnight, but if I had to put a date on it, it's probably 2028 to 32 is probably your monetary reset. And obviously there's a battle going on as to what does that monetary reset look like. So you just had Klaus Schwab step down at the World Economic Forum, right? They've got a different viewpoint of what a financial great reset would look like, right? And then you've got, I would say, Trump and who is behind him has a different outlook. But clearly the financial system's cooked already. So it's already broken, it's falling apart. Nothing's really making any sense right now for anyone that's going to the grocery store, buying a home, or just looking at anything. It's just things are so out of whack that something has to be reconfigured. Mm-hmm. So historically, you go back and say, well, during the Great Depression, you had the Smoot-Hawley Act. They put on 25 to 50% tariffs on everything to help reshore jobs and get manufacturing going. Critics would say it didn't really work too well. And then other critics would say perhaps it was done on purpose to dampen down the economy and not allow it to recover quickly, to allow a transition to happen. And at the time, we were transitioning really from the European control of finance, and it ended up coming over to the United States. And so there's a lot of people that are wanting the world to go more to the Chinese model. What does that look like, right? That's more the state, the police state style of social credit scores and different things like that. So not really sure what this looks like. I think gold could perform quite well. Probably when people talk about how high gold could go, sometimes it just gets thrown out like there's no way. But if we just go back in time and say, you know what, well, where were we right around 9/11? We were in the low 200s. So we're up more than 10x in 20 years. Well, that's pretty incredible. Has real estate gone up that much? I don't think so.
Probably in some areas.
Probably in some areas, right? Mm-hmm. But gold has such low risk. There's no maintenance costs. Like you buy real estate, right? You're paying property taxes on it. That's quite hefty. And then there's maintenance costs and things. So really, when you think about gold's performance just over the last 2 decades has been pretty dang good. It's been volatile in between. I don't know if I want to give my price prediction on this show to you today, but I think when you hear about, oh my gosh, Bitcoin's going to change people's lives, it might. It already has. Depending on where you bought gold, it may have changed your life or put your family in better footing. I still think those that are buying today has potential of game changing financial reorder is what is happening. And I think, didn't Trump just say whoever owns the gold controls the world? Mm-hmm. They play the rules of the game. So clearly China's doing it. The U.S. is trying to resurge in gold, and so I like I said earlier, you fall in the footsteps of the giants, mm-hmm. and you don't have to take outsized bets or heavy risk. And I'm a big fan of just kind of stockpiling and dollar cost averaging in and what could be wild is I think a lot of people feel like they've been left behind in gold, even in silver. I mean the retail market over the last year and a half now has been big sellers. And so a lot of people are like, oh, we're at highs. And a lot of that might be based on needs, right? Maybe their kids are graduating school. They want to put a down payment on a home, or just to get by. So that's totally understandable. But we're starting to see a little bit of a shift as to who is buying now. And it's your bigger buyers. It's first time buyers are coming in. So some of the people are exiting. They thought $30 silver and up is expensive. Others are like, oh my gosh, this doesn't make sense. It's going to go a lot higher. And I think you're seeing the same thing with gold as well.
Mm-hmm. Well, I certainly think there's, somewhat of a hangover from people that entered the market based upon false assumptions or sensationalism, 2021 timeframe, which I theorized for a long time was going to have a dampening effect on at least the kind of the retail side of the market in the West. But why do you think the retail public still isn't really participating in this? Is it basically what you're saying, that the US has been in recession now and a lot of people need to kind of pay some bills?
Yeah, probably global liquidity is down, like COVID, right, sucked a lot of money out, right? People were hurting, and then the government printed, and then we had the roaring, everything was on fire. Money was just slushing around, and whether it was a Rolex, a car, a house, or other things, and a lot of that, that slush fund isn't really sloshing right now, and that's really globally too. So I think that's definitely an element. When people say, "Oh, the average household is stressed," that's completely right. But it's, to me, Tom, it's all about capital rotation, because a lot of people own equities, right? And there hasn't been a stock market concern or fear for quite a while, and here we are. 2025 feels a little different right now, just over the last few weeks, and people are going to look at their statements and go, "What happened in April?" So it would seem to me this is the first time we've had, discussion of, are we in a recession or not? And to me, the next question is how deep does it go? I don't want to use the term Great Depression, but I think the reality is we could be having those discussions here before long if the trade negotiations don't change. And if you're a businessman, right, and whether you're a sales rep or an owner, you don't know what the outlook is for you personally, or you don't know if you need those reserves. So I think a lot of people are just holding on to cash right now, and they're not necessarily deploying it so much. But I'm definitely seeing, the last few weeks, we have seen, I would say, the higher net worth people that have not really bought a lot of gold or silver before are stepping in. So huge buyers are stepping in. Whereas I think still the general public is still pretty quiet. Although the selling has waned a little bit in April, but retail has not woken up, and I think that could be an interesting sign, and it could cause squeezes for the asset that we've not seen. So that, there's probably a couple things at play all at the same time here.
Mm-hmm. Josh, as you're talking about how deep this recession could go, it really seems to me that the public and the markets have been used to this idea of the Fed put. But, I saw, for example, a chart of Chinese container shipping, right, recently, and it is just fallen off a complete cliff. So if we start getting this maybe front running in some ways of tariff-based inflation, I think the Fed is going to have a lot harder time kind of coming to the market to inject liquidity to be able to save the market if we're seeing those two situations at the same time. So how do you think that balance kind of plays out going forward? I know that's an outcome with a lot of possibilities, but the two goals that the Fed has really seem to be looking like they're at odds here in the near future.
Yeah, that we know there's the Trump administration, and there's the Fed, and clearly they're in a battle, and I think that the concept is, well, maybe Trump just wants this thing to crash early, right? He's got to refinance a lot of debt. Mm-hmm. He wants a better interest rate for the government. Totally valid. Inflationary concerns, but he's really working hard on oil going down. And I know I'm in Wyoming. There's some energy people here, and it's the same thing in Texas, and you're in Canada, I think, right now. These prices are not really profitable. So the oil, like the drill baby drill thing, isn't really great. You're almost like the Permian Basin is almost, break even. So I think you're going to see, with these prices going down, that could actually be a little bit deflationary. If anyone has looked for plane tickets for the summer for travel, I'd say plane tickets seem to be down, just based on my own look, 30 to 50%. I'm just kind of crazy, which means there's less people flying. So is that deflationary in some buckets and some things get more expensive? I completely man, I don't know how this is going to, how does the government even report things? Is it audited? So what are we going to see? So to me, if the Fed doesn't cut, Trump is going to have to do something different, and he's going to have to just create a Doge give back. Maybe the government taxed Americans too much, and they stimulate in a different way, right? And so you saw Bush do cash for clunkers. We had the COVID stimulus. We had the PPP loans. If I'm Trump and I want manufacturing to come to the United States, and small businesses are they going out and buying manufacturing equipment? Well, where's the equipment come from? Mm-hmm. Europe or somewhere else. The United States doesn't make a lot of equipment for manufacturing. So suddenly, if I'm Trump, perhaps I let this thing roll over, crash. It's bad. And then I come in and say, you know what, America, I care about you. I care about small business. I'm going to basically do a government-backed loan through SBA, like they did a PPP loan. And if the tariff rates change in the next few years, we'll forgive the equipment loan. And we'll say we'll do no tariffs. You got to go buy that equipment from Germany or Italy or Japan or wherever you need to go. Frankly, even China. Go buy equipment from China if you have to. Mm-hmm. Get that equipment in here, tariff-free, the next 18 months.
Right.
Give you a zero-interest loan backed by the government. Like you would see, right? Whoosh! Suddenly, consultants are being hired. You're building out engineers. Like you would have an economy like that. Is that going to happen in 2025 or 2026? I don't know. If I'm Donald Trump, that would be something on my that I would look to do to try to force feed an economic recovery. But in all that, does it work? And how bad does it get? I can tell you, I moved my factory. I was in 2 facilities in Arizona, and we just completed the move a few months ago to Wyoming. It took about 4 years. So equipment is not quickly put online. I'd say your average item is probably, for me, it was 18 plus months to bring online and commission. So by the time you need, if anyone's built a building and you need lots of power, transformers for electricity are out 1.5 to 2 years. Mm-hmm. Where's that stuff coming from? So can we even handle all this to make up the difference of, let's say, the trade imbalances or what's taking place? So I think it's going to be a wonderful opportunity for some, right? And it's going to be dreadful for others. And I don't know, I don't know if Trump will be able to succeed or not with it all. I do know that he's going to try, and clearly when there's volatility, right, there's winners and losers. And I think if you're in the right asset class, you're in the right things, you'll hopefully be able to get through it and perhaps come out even better. So yeah, it's this is going to be kind of a wild ride in terms of what can Trump do? I mean, who's going to turn down in the U.S.? Who's going to turn down a Doge refund? Hey, sorry, we taxed and spent too much of your money. Don't worry, here you go. Here's 10 grand. Mm-hmm. But instead of going to Best Buy to buy a TV like they did in previous years that was coming from China, why don't you buy American goods? Or let's go. I mean, Walmart's trying to, they're trying to fire up American-made, vendors through their platform. I mean, we're going to have to invest in, locally made, locally sourced friendship. And to me, I don't think it's just U.S. And I think, I'd say you're on Alberta is quite much more friendly to the libertarian, conservative mindset, but in Canada. But I think we're going to have to, as neighbors, we're also going to have to figure out that what do you do that we don't, and let's work together. And I actually, my take on Trump with Canada and Mexico was, I'm going to kick you in the pants, get your act together, stop partnering in Panama, stop partnering with China, stop being run by cartels for the guys south of the border, stop, I would say in Canada, stop being cozy with the World Economic Forum and hurting your people and all the mess that happened during COVID. It was almost like maybe a shot across the bow for the neighbors, like, hey, we need to better link up. But it was almost like Mexico kind of got the message a little bit better than Canada just started punching back. And it was like, I don't think that's what Trump wanted. So I could see the world bifurcating. So it's axis and allies, right? That's probably you're going to get sweetheart deals with your friends for trade. Mm-hmm. If you have something that they need. That's right. And if you're not, I think you're going to be left out. Maybe you have no trade. Maybe it's high tariff to no trade. I mean, that's if we had a World War III, there's going to be no goes, right? What would that look like? Are we prepared for that? And I would say no. Are we more prepared today than we were 4 or 5 months ago? Maybe. So this is, you're seeing healthcare companies are moving pharmaceutical manufacturing to the U.S. Why is it all being made in China? I guess, and India. We have nothing made in North America. So you're seeing, I'd say some of the bigs, they're moving forward. I think, was it Merck meant something's being built in Delaware right now. So this is, I'd say it's like a really big chess game / risk / all the childhood games you could think of. So not really sure how this is going to all shake out.
Mm-hmm. Well, I appreciate that, basically illuminating all of the different possibilities, because I think we do need to consider all of these different avenues that this could take. And, the point about manufacturing taking time to come online, I've spent a lot of time in and around Phoenix, and going down there for the last 3 years, there's a massive semiconductor plant kind of on the northwest side there. Two of them that has been under construction for the last 3 years, and it's still not finished. Right. And that just, reinforces this idea that you can't just snap your fingers and have manufacturing move back to these places.
Yeah. And I still have construction going on if you hear anything. So to your point, and it's a huge investment. Mm-hmm. And if you don't have guarantees that the tariffs are going to be there, companies, huge expense, engineering, people, equipment, facilities. And if tariffs change again in 2 weeks, 2 months, 2 years, you're out of luck. And so that's where I think at some point Trump's going to have to take the uncertainty and provide certainty. If not, it's just going to get really, really bad. So how does that all play with gold and silver? It's a great question. U.S. is a very high tech. We're one of the biggest consumers of silver in the United States. In the world. And so a lot of the silver comes to the U.S. For manufacturing. I know my company, we've never had more contract manufacturing bids and inquiries that over the last few weeks than in our entire history, which is fantastic. So,
and is that coming from all over the world?
All over the world. And frankly, it's for people that, it's anything from the bullion industry, from coins to jewelry to other things, anything that's manufactured precious metals, gold, silver. And so we're a full-fledged foundry. So we melt, we fabricate, we CNC machine, hydraulic press. We have artists here, casting, doing all different types of stuff. So the reality is the U.S. is one of the biggest markets for companies to sell into. And it's open to the world, but now there's a tax on it. So I've seen a little bit of benefit, and we're hiring right now anything from creative to project management to engineering, manufacturing, just to handle these projects coming in, which is great. And I think that's what Trump wants to do. But the reality is I'm very blessed that I invested in manufacturing in not just in the U.S. but in a state that wants manufacturing and with low taxation and good quality people. So I'm kind of in the right place at the right time. And even my vaulting operation, the Wyoming Reserve, we're in a foreign trade zone. So we got federal approval for our property in December, and we are in what's called activation phase. So we're weeks away. So we're tariff free. So we're able to import things that could be subject to a tariff. And I realize all the tariff stuff it's kind of a wreck right now. We don't know how it's all going to shake. But if you're an investment product or someone that needs to bring a real world asset on chain and put it on the blockchain, or it's artwork and it needs to be stored somewhere and you don't want to pay 10, 25 or worse %, our vaulting facility here for high security vaulting, and then we manage other sites here in town that we can handle anything from copper to other products that may or may not get hit with tariffs. So again, but how long did that take, to put that in place? So, I think if you're a small businessman, wherever you are, making moves now. Like a lot of times families think like, oh, I need to leave the city. It'd be better for my family to be raised somewhere else. The old adage, I think it's nomad capitalist that says, go where you're treated best. Right. And I think that that's true. And a lot of times we're hesitant to make moves, even though we feel it in our gut, that we might need to make them. So I think there's probably other people out there besides myself that have made, maybe some of those moves. And, I did mine during lockdowns because I just saw the government spending and what they were doing. And I said, there's no turning back from this. And now we're in the afterglow. I wouldn't know if I call it a glow, but we're in the after effects, the hangover, right? And then what's coming, and more stimulus is coming. I think that's where I'm coming at. They're going to have to print their way through this mess. So if it's not going to be an overnight click, silver and gold go to the moon overnight, right? There's going to be this up, down, crash, burn cycle, liquidity print. But what's going to probably continue to do really well, over long term it's going to be assets that aren't attached to the credit market. And I think that's what you're seeing right now with real estate. It's attached to credit. Credit goes away, asset prices go down. So gold and silver, you can't really put oil in your backyard very easily. So, that's where people want tangible assets, and they want them stored, have some at home. But for those, once you get above a certain amount and, it's not safe to have too much gold or silver in your home, and someone walks in and puts a gun to your wife's head, you're going to give it all away, and it's not insured. So that's where, vaulting facilities, they're booming. The U.S. doesn't have, has never seen this amount of gold in the United States. So a lot of these vaults are actually blown out of their insurance limits, believe it or not. So on a total loss scenario. So yeah, it's a very interesting time to watch it, and talking with mining companies. That's the industry I used to do risk management for mining companies, and some of the guys I worked with, they maybe were lower on the totem pole. They're like the kingpin at some of these companies now, and just kind of understanding, global trends, resources, their assets, what countries are they in, and mining companies are having a hard time finding easy accessed, resources to develop. And in some of these jurisdictions, right, nationalization, and it could also be just through taxation increases, right? Biden was talking about hitting hard rock mining with a huge thing. He didn't do it, thankfully. But I mean, all industries, this is going to be a tough time. But if you're a gold mining company and you're set up in the right jurisdiction and a good management team, you're probably killing it right now, even though the stock price isn't fully reflected yet. So, how this all shapes out, I'm not sure.
Mm-hmm. Well, as part of that, Josh, what else are you kind of keeping your eye on? Understanding that we don't know exactly how this ends up shaping out. Are there particular things that you're paying attention to? Say, I know you've talked about the unwind of the Japanese carry trade, for example, and how that can affect the markets in the world right now.
Yeah. Yeah, capital rotation. What's being dumped and where are they going to put it, and how's it all moving? What the BRICS countries are doing. I'm kind of watching it seems like Europe wants war. Trump does not, at least with, Russia, right? Mm-hmm. And then you've got the Iran thing, which is bubbling. You've got the Taiwan thing, which feels like at times is any moment. It was kind of under talked about, but did anyone see the news about how much military equipment the U.S. just shipped into the Philippines a couple weeks ago? Mm-hmm. It was barely covered. But on the U.S. government's military website, they did a pretty big video montage of everything that was happening. It's so whether that's just a, rattle the cage to, show a force of what they're doing, look at our videos. But the reality is they're moving, assets are moving all around the world militarily as well. So defending trade zones, other countries. I would say the friction and flashpoints. I think you could storyboard all the potential flashpoints, and it's too much. And frankly, I like to sleep at night, so I say my prayers and hug your kids and do the best you can in whatever you're doing. I don't like to live in the doom and gloom world, but if you do look, I would say at the flashpoints and what's essentially taking place, it's it's that's kind of what I'm watching. Just a little bit of everything, and how that, who's aligning with who and who's partnering on what in various lanes.
Mm-hmm. Well, I think with the amount of uncertainty in the world today, and at least talking through and understanding the possible different scenarios that could play out here, I think is extremely important. And I really appreciate you taking your time to help us walk through and understand a lot of those today, Josh.
Yeah, absolutely. It was great to chat with you again.
Absolutely. Is there anything else that you'd like to leave our listeners with to maybe think about before we wrap up?
Yeah, nothing else. If you've never seen the products that we make in Wyoming, we're it's scottsdalemint.com is our site. And then we're listed on most bullion dealers really all over the world as well. So all over the place. So depending on what's going on with tariffs in and out, I know I produce a lot of products for Canadian banks, and right now Canada's hitting some of that stuff. But yeah, just appreciate the listeners tuning in, and look forward to chatting again soon.
Absolutely. And of course, you're on Twitter now at Josh Philip Phair as well.
I think I've been on for like 90 days. So I'm pretty new there, but yeah, you can check me out there, Josh Philip Phair.
Excellent. Josh, thanks so much for your time today.
Great. Thanks, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.